The FEMA 50% rule, also known as the Substantial Improvement Rule, is a regulation set by the Federal Emergency Management Agency, FEMA, that impacts homeowners in flood-prone areas. Here's what you need to know about the FEMA 50% rule and how it affects homeowners. 1. What is the FEMA 50% rule? The 50% rule states that if a homeowner in a SFHA makes improvements to their property, the cost of those improvements cannot exceed 50% of the current market value of the home. This includes repairs, renovations, or additions to the structure. If the total cost of the improvements exceeds 50% of the home's current market value, the entire property may be subject to additional flood protection requirements. 2. Purpose of the rule. The rule aims to reduce the risk of flood damage. By limiting the amount of improvement allowed without raising the structure above the base flood elevation, BFA, it ensures that homes are better prepared for potential flooding. It encourages property owners to either elevate their homes or bring them up to current floodplain management standards if they plan significant repairs or improvements. 3. How the 50% rule affects homeowners. If improvements exceed 50% of the market value, if the cost of repairs or improvements, including labor and materials, exceeds 50% of the home's market value, the home must comply with current floodplain regulations. This usually means the house must be elevated to or above the base flood elevation, BFE, the level that floodwaters are expected to reach during a 100-year flood event. For example, if your home is in a flood zone and is damaged or you're doing significant renovations, and the costs of these exceed 50% of its value, you may be required to elevate the home, build floodproofing measures, or take other flood mitigation actions. Market value versus improvement cost. The market value is typically assessed by an appraiser and is based on the pre-improvement value of the house. Costs of improvements are evaluated by the local authorities, and this includes things like structural repairs, electrical, plumbing work, and other renovations. Non-compliance consequences. If you don't comply with the rule after reaching the 50% threshold, the property may no longer be eligible for flood insurance through the National Flood Insurance Program, NFIP, or you might face significant penalties. 4. What qualifies as an improvement? Repairs. When damage occurs from a disaster, repairs made to the home may be considered improvements if they substantially alter the structure. Renovations and additions. Any significant upgrades, like expanding the square footage, raising the foundation, or making the home more resilient to flooding, can trigger the 50% rule. Routine maintenance, such as painting or replacing windows with similar materials, typically does not count toward the 50% threshold. 5. How is market value determined? Market value is usually determined by a professional appraisal or by using the assessed value for tax purposes, depending on the jurisdiction. It's important to keep in mind that the market value is not the same as the replacement cost, so a home that's expensive to rebuild may still have a low market value. 6. Compliance and risk of flood damage. Homeowners who exceed the 50% rule threshold and don't raise their homes or make other required modifications may face significant damage during future flooding events, which could lead to increased insurance premiums or difficulties in obtaining insurance altogether. FEMA's goal is to prevent taxpayers from bearing the burden of continually providing federal assistance for flood-damaged homes that could have been made more flood-resilient. 7. Exemptions and exceptions. In some cases, grandfathering provisions may apply, which allow for some older homes to continue existing in flood-prone areas under previous regulations, even if they don't comply with the new standards. However, these exemptions are limited and vary by region. 8. Local floodplain management. The application of the FEMA 50% rule is typically enforced by local government agencies in collaboration with FEMA. Homeowners must consult their local building codes and floodplain management ordinances to understand specific requirements in their area. In summary, the FEMA 50% rule affects homeowners in flood zones by limiting the amount of improvement that can be made to a property without triggering the requirement to bring the home into compliance with current floodplain regulations, such as elevating the structure. If renovations or repairs exceed 50% of the home's market value, the homeowner will likely have to invest in flood mitigation measures to meet the new standards. Understanding and complying with the rule can protect homeowners from future flood risks and ensure continued eligibility for flood insurance.